What is up, guys? Stress Trader here, and today I want to show you guys my swing trading strategy. So, without any interruptions, let's get right into the video. Okay, so my trading strategy relies on fundamental analysis and technical analysis. Let's get into the technical analysis first. So, as you can see here, this is a trade I took about a week ago. I closed it yesterday. So, this trade that I took was I entered it based on technical analysis. It went back and hit this resistance right here, and it went completely down to the support, and then it absolutely skyrocketed. I think this trade only lasted me like 4 days, 3 days. So let me explain to you how I caught this trade. So of course, it's technical analysis. I use support and resistance. It's very simple. I don't use like smart money concepts, stuff like that. Smart money concepts is better for the smaller time frames, like 15 minutes, 5 minutes. But remember, if what works for me may not work for you, and what works for you may not work for me. So I'm just showing you guys this strategy. I'm not telling you guys to adopt the strategy. This is the only strategy you can make money with. I'm just telling you this is what worked for me, and I have a 60% win ratio with this with a 1 to 2 risk to reward ratio. So okay, so now I just use simple support and resistance. Um, I don't really use any fancy indicators, right? Well, I do use the ATR. It's just to show me what how many pips candle prints on average. So now that we got the technicals done, now to get to the real fun. The real reason I enter my trades, the real reason I I started being profitable in Forex, and that is the fundamentals. Most people only they study technical analysis for hours and hours, but when they go to place a trade, they keep getting stopped out, or they just or it that just doesn't go in their favor. Stuff like that. That's why we have fundamental analysis. So how do I do fundamental analysis? So I use COT data. That's first. COT data is basically, if you never heard of it, you may watch a in-depth video of it, but because I don't have that video on my channel, cut that out. So the first thing I use is COT data. If you don't know what COT data is, go search it up on YouTube. So I'm just giving you guys the basic explanation. COT data is what the big banks are doing. So every week, the banks have to um, file a report to United States of their positions. And of course, if you have traded Forex for a long time, you know that the banks are the ones that control um, the, the currency pairs, everything. So what I do is I go to COT data, I go check the COT data, and I just pull up my currency pairs, so COT data for euro and COT data for Japanese yen. And on this particular trade, I saw that the banks were absolutely bullish on the euro. They were like 70%. 70% of the banks were buying euro, and 80% of the banks were shorting Japanese yen. So this is already a green flag. I don't need anything else to get into my trade. But of course, we have to double check, triple check everything. We need more confirmation to get into a trade. So what I do next after I check the COT data, actually I do the COT data second. The first thing I do is I check the retail sentiment. So most people think that if a lot of people are buying, I'm gonna buy too, because more people buying means the price is gonna go up. Blah blah blah. In Forex, or I don't know in the stock market, because I don't trade the stock market that much. I mainly have investments. stuff in there. But the majority of people, traders, retail traders, lose money. Well, I'm not flaming traders. I'm a retail trader too, but the majority of retail traders lose money. So, what I do is I check the retail sentiment, and if like on this on your Japanese yen, when I took this trade around here, it was 80% or 20%, 80% of people were short on the Euro Japanese yen, and only 20% were long. What I did, I took this long position. This was the only the only two confirmations I need is the COT data and um the retail sentiment. Of course, I use other things like GDP, growth, inflation rate, but those things are for another video because they're too complicated and it will take too long. The video will be like 1 hour because I keep rambling on. So what I do is, so I check retail sentiment, I check COT data, I do my technicals, and if everything checks out, I finally place my trade with proper risk management. What I see most people doing, let me take this, let me unlock it. They do. I had a 150 stop loss and a 300 or 260 pip take profit. So it was almost two to one. It was actually 2 to 1. I was risking $100 because I'm trading FTMR counter down, and I was risking $100 to win 200, and this trade my take profit. I'm almost done with the FTMR account. So now we can check. Most people do is when they take a trade, they put their stop loss right here. So this I would recommend you guys not to do it. So let's say if you're risking 1%, this can get hit easily. Right now it didn't get hit because it reversed. It didn't like consolidate and then go up. It just went up straight because the big banks and had a lot of bullishness on euro, and there was a lot of people short on euro Japanese yen. That's why it just went up. Normally it consolidates and then it goes up. So people put their stop loss like this, or they go on 30 minute and they put they like sniper for stop losses like this. They put their stop loss. Maybe they take the push their position right here. They put their stop loss in the previous low. It got hit, and then the market goes in your favor. Guys, don't do that. You will end up blowing your entire account. Trust me. I used to do this too because I was a greedy mofo. I was greedy. I wanted more. I wanted to place high lots and have a a 5 to 1 risk to reward ratio. No, ignore that. If your strategy depends on what strategy you use. If your strategy allows you to get a 3 to 1 risk to reward ratio, you have a golden strategy. And if you're consistent, you have a golden strategy. Trust me, my strategy is good the way I trade. I trade on 1 to 2. I'm not taking too much risk, and I have space for noise. Basically, when the market keeps going up and down, it goes down very quickly. I have space for that. It doesn't just take me out completely out of the trade. So yeah, guys, that's how I trade. That's my strategy. Got this trade. This trade took like 4 days and hit $200 my $200 profit target like that. Simple. So the lessons to be learned here are: never follow retail sentiment, always check COT data, always get good entries. Some people don't worry about entries. That's okay if you have a good stop loss. So basically maybe a 200 pip stop loss or 100 pip stop loss, stuff like that. And the third thing that was a bonus, meant to be a bonus, is when you're in trades, when you have overnight risk and stuff like that, always check news, because the news will screw you up. I had an incident happen to me. I was $150 in profit on my trade. News came out and I absolutely got wrecked. I trailed stop losses. I forgot to mention that in the video, but I trailed my stops. I trailed my stop loss to 100. So basically, I got so basically, when I go to a $100 in profit, it hits my stop loss like that. What happened was the market reacted so violently. It went back, hit my stop loss, and it went up like 300 pips in the next week or something like that. I could have hit my take profit of 200, 200 or $250, but that didn't happen. So guys, don't. So the lessons to be learned here are: don't trade trail stop losses to close. Always check news. Always check fundamentals, and always get those good entries so you can place your stop loss at a good place, at a good key level. So guys, that was the video. Hope you guys enjoyed it. Enjoyed it. Don't forget to leave a like and subscribe if you guys want to see more content like this. And I will see you guys in the next video.